Hello everyone, welcome back to our channel. Today, we're diving into the fascinating world of exchange-traded funds or ETFs. If you've ever wondered how to analyze ETFs to make smart investment decisions, this video is for you. By the end of this video, you'll have a solid understanding of what to look for when evaluating ETFs. So, let's get started. Understanding ETFs. ETFs are investment funds that trade on stock exchanges, much like individual stocks. They hold a basket of assets such as stocks, bonds, or commodities, and their performance is designed to track a specific index or sector. ETFs offer diversification, liquidity, and typically lower fees compared to mutual funds, making them an attractive option for many investors. Step 1. Define your investment goals. The first step in analyzing ETFs is to clearly define your investment goals. Ask yourself what you want to achieve with your investment. Are you looking for long-term growth, income, or perhaps exposure to a specific sector or geographic region? Your investment goals will guide your ETF selection process and help you narrow down the options. Step 2. Understand the ETF's underlying index. One of the most critical aspects of analyzing an ETF is understanding the index it tracks. An ETF's performance is directly tied to the performance of its underlying index. Research the index's composition, the sectors it covers, and its historical performance. This will give you insight into the ETF's potential behavior in different market conditions. Step 3. Examine the ETF's holdings. Once you understand the underlying index, take a closer look at the ETF's holdings. This information is usually available on the ETF provider's website. Analyze the top holdings and their respective weightings within the ETF. Consider the diversification across sectors and geographies. A well-diversified ETF can reduce risk, while a concentrated ETF might offer higher potential returns, but with increased volatility. Step 4. Analyze the ETF's performance. Performance analysis is a crucial step in evaluating an ETF. Look at the ETF's historical performance over different time periods, 1 year, 3 years, 5 years, and since inception. Compare its performance to the benchmark index and similar ETFs. Keep in mind that past performance is not indicative of future results, but it can provide insights into how the ETF has navigated various market conditions. Step 5. Assess the ETF's fees and expenses. Fees and expenses can significantly impact your returns over time. ETFs generally have lower expense ratios than mutual funds, but it's essential to compare the fees among similar ETFs. Look for the total expense ratio, TER, which includes management fees, administrative costs, and other expenses. Lower fees can enhance your overall returns, especially for long-term investments. Step 6. Liquidity and trading volume. Liquidity is an important factor when analyzing ETFs. It refers to how easily you can buy or sell the ETF without affecting its price. Higher trading volumes typically indicate better liquidity. Check the average daily trading volume and the bid-ask spread. A narrow bid-ask spread suggests that the ETF is highly liquid, which is beneficial for investors. Step 7. Distribution yield and dividend history. If you're looking for income, examine the ETF's distribution yield and dividend history. The distribution yield indicates the annual income distributed by the ETF as a percentage of its price. Review the consistency and growth of the dividends over time. ETFs with a stable and growing dividend payout can be attractive for income-focused investors. Step 8. Tax efficiency. Tax efficiency is another critical aspect to consider, especially for taxable accounts. ETFs are generally more tax efficient than mutual funds due to their unique structure. Look at the ETF's turnover rate and the capital gains distributions history. Lower turnover and fewer capital gains distributions can help minimize your tax liability. Step 9. Analyze the ETF provider. The reputation and reliability of the ETF provider are also essential. Established providers with a strong track record in managing ETFs can offer additional peace of mind. Research the provider's overall assets under management, the number of ETFs they offer, and their market reputation. A reputable provider is more likely to manage the ETF effectively and maintain low costs. Step 10. Consider market conditions and economic factors. Finally, consider the broader market conditions and economic factors that could impact the ETF's performance. Analyze the current market trends, interest rates, and geopolitical events. Certain sectors and regions may perform better under specific economic conditions. Align your ETF selection with your outlook on these factors to enhance your investment strategy. Analyzing ETFs may seem complex, but breaking it down into these manageable steps makes the process more straightforward. Remember to define your investment goals, Understand the underlying index, examine the holdings, and assess performance, fees, liquidity, distribution yield, tax efficiency, the ETF provider, and market conditions. By following these steps, you'll be well equipped to make informed decisions and select ETFs that align with your investment objectives. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more investing tips and insights. If you have any questions or topics you'd like us to cover in future videos, leave a comment below. Happy investing!